with us. Ira Jersey of Credit Suisse. Ira, headlines out of Greece from the Prime Minister in an email speaking in Parliament today. He says, turn the page. Marvin, I want you to go down here. Marvin, the camera guy. Here's a 2-year yield. For those of you in radio, there's a big spike up in April and May. That panic, the big drop down as ECB saves a day, and up we go. There's a real tension now. It seems like, Ira Jersey, we're on the edge of a precipice here. Which way does this tilt, and what are you watching?
Well, it is a confidence issue, and the issue, I think, is that when you have very large deficits, very large debt, and when you have countries' bonds that are trading at the stress levels, it's hard to get away from that and hard to find buyers until there's a very clear resolution. You saw not a dissimilar thing back in 2008 during the financial crisis, that until you actually had bailouts and literal bailouts, you really didn't get spreads that were meaningfully improved. And so you could have a similar situation here. Now, I don't cover Greece, but at the same time, we watch it very closely, just because things that are going on in the periphery of Europe are very important to global growth. They're very important. You're talking about tens of millions of people who are consumers and have jobs and will need support from other countries. We do think that it is in the best interest of Europe to keep the currency together. So there'll have to be some type of resolution, but there hasn't been one that was forceful enough to improve the confidence you just spoke about.
Ira, some people might say that if you wait for a resolution, then you will have waited too long.
Well, it might be, but
then the opportunity will have passed you by.
Well,
right?
Correct, but you have to have, from a risk management perspective, you have to be willing to lose that money. I mean, investing in distressed assets tends to be a risky business, and in a mark-to-market environment like we have, some institutional investors and banks and everyone else are not willing to take that risk, even though they might be able to put in money today. They could wind up losing 10% before they make 40%, right? So they have to be very careful in how they operate.
And
there's risk and there's risk, though, right? I mean, it's also risky to tie your money up for 10 years at less than 3%.
Sure, and there's certainly significant inflation risk to doing that. And clearly there are a lot of people who think that inflation will be a problem at some point in the future. But that's not really our call. I mean, we think that over a reasonably long time horizon, inflation is not going to be a significant issue, and we're going to have sub 1% inflation for the next year, if not longer.
Within your notes and other notes, there's a real question here about cost of money and the reality of LIBOR. Is LIBOR a good measurement now, or is there a lack of confidence in what we're reading there in flat LIBOR in the short-term space?
Well, there's always a question about whether or not LIBOR, regardless of the currency, is a good measure.
Do they really wear tuxedos when they set the rate?
I don't know, and I can actually tell you I have seen the person, at least at one financial institution, who does it.
There's a human that breathes and actually fixes LIBOR.
And they actually, and there's one for every bank that sets it. And
can we believe the rate, the 16 banks, whatever it is?
This is always the question. You could probably believe the trimmed mean, which is what they use. They use the trimmed average. So they take the highest, they take the lowest, they drop those out, and then they average the middle bit. And so that probably is pretty close in general. The question is, are there enough outliers, and are there people who know what they can fund at? I think in this environment where there is a lot of cash, financial institutions globally have been raising cash. They have a general idea about where they can fund. 2 years ago, not as confident that we really knew where LIBOR was.
Were you surprised there was 171 banks listed by the ECB today that came to the till? That's a lot of banks, isn't it?
It's a lot in number, but they still didn't bid for everything. There was over 400 billion euros worth of one-year tenors that are going to mature tomorrow. So the expectation was that a very significant number of them, so 200, 300 billion, was going to be refinanced and bid for in this 3-month auction. But there was less than 150 billion euros. So that's saying that the financial stresses, even though they're still lingering, certainly in the banking sector in general in Europe.
Well, that was Ira Jersey at Credit Suisse talking to Tom Keene and Ken Prewitt with Bloomberg Surveillance discussing the credit problems in Europe.